Oh, all right. Looks like we are live. We are getting started shortly, everybody. Just waiting for your favorite guy, Spencer, to join your other favorite person, Edwin, here. So just give it a second, and we'll let you guys trickle in. And, we can just banter. Oh, looks like Spencer's here. All right, I'm out
Here.
of here.
I'm sorry. I'm here.
I'm out. I'm out. See ya.
Edwin, what's up, man?
Hey Spencer, how have you been? I noticed some glare.
You're always so happy. I wonder. Oh, I know why. Because we're down today. And you like shorts.
Absolutely. I'm just generally happy, and I'm always happy to be on Benzinga.
Right.
I'm noticing my lighting's kind of weird. Let's go here.
All right.
Um,
It was an eventful week, Edwin, on the short side of the market. We were just talking QS, and let's probably start there. If you want to share your screen, and we can go into it. But this QuantumScape, man. This is a hey. Some short reports have legs, others do not. For whatever reason, they just die on the vine. This one's got some legs, though. It looks like.
Absolutely. Okay, so there were 8 new activist shorts this week. QuantumScape is the big one. Let me share my screen. Share screen. Share. Are we good, Spencer?
Yep.
Okay, so Scorpion Capital, it's a new activist run by Kirka Law and published on QuantumScape, roughly a $13 billion company, in a report titled A Pump and Dump SPAC Scam by Silicon Valley Celebrities that makes Theranos look like amateurs. It was a 188-slide report. Scorpion Capital, I think, was formed about 6 months ago. They had one big report on Nevro, which was pretty well received, but didn't have as much of an impact. I gotta be honest, when I see a 188-slide report, my first reaction is negative because I think no one in the world.
Next, I'm not going to read all that. Next.
No one's going to read all it. But the coolest thing and what I like about them is they do a really good job with the beginning, getting you intrigued. They interviewed, I believe, 14 experts, 9 of whom were former employees from QuantumScape R&D lab. The whole premise of QuantumScape, as I understand it, is they're making a new lithium-ion battery that can store energy much more efficient and can really take electric vehicles to the next level with their new technology. But this report said, our technology isn't as advanced as they claim to be doing. Like a lot of the former employees are saying, like the CEO, he's a little different, he's a little aggressive. We weren't able to solve the problems. This was a quote I really liked from one of the former R&D employees from QuantumScape. He said, "I worked for many CEOs and I'm more in the camp of being honest with your investors. That's not the QuantumScape way." He asked one former employee, "Do you think they're lying?" And then the former employee said, "Your question is too straightforward. I can't comment." And there's just like a bunch of these, claims. The science stuff, I don't know if he made a super great case on the science. Bill Gates was one of the backers of QuantumScape, so it's not like they've got no one who's really vouching for them, Spencer. One thing I will add, that I think
didn't Morgan come out today and defend them?
I'm sure, analysts typically defend companies. I think one thing that hurt the company, though, is they gave, I thought, a really odd and quirky response on Twitter. So they put out a Twitter thread basically saying, "Oh, this is a financially incentivized short seller that put out a report. They're just trying to get short-term stock movements. Look at their disclosures. They claim they're not going to be liable for any misinformation." Whenever you see a company lead with that, to me, that's a really big negative sign, because you should be attacking the substance. You shouldn't be attacking the messenger. Attack the message. Yeah. So I think that got them in a little bit of trouble. One thing I've also noticed with a lot of these activist short sellers, the lesser known ones tend to have more of an effect, where you can get this follow-on effect with the stock. So QuantumScape, I think, has just continually traded down post the report. Mm-hmm. The reason you get that with these smaller, lesser known activists, like Scorpion, is because the bigger activists generally take huge positions ahead of their reports and might be covering a lot and putting in a lot of buying pressure post the report. But for the lesser known activists, you got less of this weird short covering post report, so you can really get the information to flow out and kind of trickle out. Whereas if a Muddy Waters were to publish on something, you might get a lot of covering after. So that's one thing I've noticed. Lesser known activists tend to have more of these like follow-on day effects with the companies they write about. So overall, the report's been making a lot of waves. And I thought the company's response was really bad. There's a new activist, Spencer, called Joker Research on Twitter. Everybody should follow him. And he put out a new report on Netgear. And I've noticed there's been like 3 new activist short launches in the last 2 weeks. So it's interesting to see that a lot of new people are going with this short activist model of publishing reports. Basically, Netgear makes Wi-Fi systems for the home. They're kind of a competitor of Ubiquiti Networks. Netgear's 2 largest customers are Amazon and Best Buy. And this guy Joker Research showed, who's anonymous, that their rankings on Amazon and Best Buy have been declining a lot. In addition, he showed that Netgear insiders have been selling at like the fastest level since 2007. So they're losing share in this home Wi-Fi market. They know that because of web scraping of Amazon and Best Buy, and then insiders are selling a ton. He talks a little bit about the competitive positioning of other companies, and he also says he thinks analyst estimates are too high for 2021. And this is another guy who just isn't followed a lot, Joker Research.
I can't take this seriously. He's just an anonymous person. I can't.
I see, it's weird. I prefer like to read the stuff of these anonymous random people, because once you're more established, usually you're taking huge positions ahead of time, and you're going to get a lot of covering the day of your report or the day after your report. While newer people, if you read it and it's good, you have more of a chance of like moving a stock over the course of a week or something. Like for a newer person, you can follow them, read the report. If it's good, take a position and probably see it go in your direction over the next day or two. So I really like following these random no-name people.
But you don't know who they are. And at least Andrew Left would put his name behind something, right? Carson Block puts his name behind something, his reputation. It's just some guy on the internet.
I think a lot of the best people have been anonymous as well. Usually, if you're going after smaller companies, which tend to be more litigious, you do stuff anonymously. Carson Spencer has even published anonymously in the past for companies where he was really afraid of getting sued. Carson's used pseudonyms too, and he's talked about, I think, one of those cases. We've got another no-name anonymous short seller, Iceberg Research, which became...
How many of these are there, man?
There's more and more every week is the crazy thing. This model of activist short reports really works, Spencer. I think it's definitely a space to watch. Right now, I think there's like 20 or 25 I follow, but I totally think a year from now, there's going to be like 50, because all you need to do is be someone smart, have a Twitter, have a website, and you can potentially make an impact with your reports if they're good. But if your first 2 reports aren't good, then you have no chance because your credibility's gone.
I guess in theory the research should speak for itself, and maybe that's what matters is the quality of the research. Maybe, but also, like, if you're going for a low hanging fruit, like QuantumScape, no offense, but QuantumScape is gotten crushed. It's not exactly a hot take to call out that stock. You're kicking everyone kicking them while they're down. I guess it should. The quality of the research should matter more. But I don't know Iceberg Research from a hole in the ground. You know what I mean? So.
Absolutely. Sorry about that. So Iceberg became famous. Let's Google Iceberg Research, actually. Iceberg Research Noble Group. They're one of the best short activists that I think are anonymous. They were exposing Noble Group back in 2017, saying, hey, this commodity trading firm is at risk of going bankrupt. And and they called Noble Group in 2016 a repeat of Enron. Noble Group ended up being a huge bankruptcy in Singapore, multi-billion-dollar bankruptcy, all because of Iceberg's first report. So Iceberg is somebody with the big track record that publishes every once in a while. Their most recent report is on Diginex. I thought this was a really good report. The ticker's EQOS. They went public through a SPAC of September 2020. And since then have been trading up and down, now about a $240 million market cap. Basically, they said this company, Hong Kong based, runs a cryptocurrency exchange. As far as we can tell, no one's really using it. There's not a lot of volume on the exchange. Even though this company has a $230 million market cap, they generated $23,000 of revenue in the first half of fiscal 2021. Which is they're on an odd fiscal year. They're losing tons of money. They've got enough cash for about 18 months of cash burn. And they've got a history of like questionable transactions. So overall, I think the Iceberg report is pretty good here. And they show there's about 300 cryptocurrency exchanges. Their exchange ranks as like 296th. And they get like no volume, and it's just like this is a $300 million company with not a lot of substance behind it. So that report I thought was really good. Culper Research is a new anonymous activist that I also really like, and that I think put out a really good report on LifeMD. So you go to their website, you see it, 19 pages, so more readable, Spencer, which I like.
All right, 19 pages.
LifeMD, NASDAQ listed, roughly $300 million telehealth company. Basically, the first part is showing that the management team of this company previously ran Redwood Scientific, which collapsed after facing FTC charges, and it was called a wide-ranging fraud. Now, he says LifeMD is doing a lot of things that aren't particularly up to code with regulation. Culper Research said LifeMD appears to use unlicensed doctors to dispense OTC medications, has implemented an auto shipping, auto billing scheme, failed to honor guarantees, and put in place abusive telemarketing practices. He also called the company a cash burning charade, which runs afoul of FTC regulations. One cool thing they pointed out on their Twitter is post-report, LifeMD's CEO canceled his scheduled media interview, which is never a good sign. And then the company also put on a press release on their website, essentially saying that the report was biased, but they didn't really address the substance of the issues. Culper, I think, also showed that one of the doctors on their website, one of the 3 doctors listed on their website, had their medical license revoked. Overall, I thought it was a really, really, really strong report. People can find it. But Culper Research is just another one of these people that not enough people are following. So when they publish stuff, there might not be a market movement right away, but then as people digest the report and share the report, it's more likely that people start paying attention.
Yeah. That sounded like a good report to me. Like your summary of it sounded good. So
Kaneko Research, this guy is not followed much at all. He runs a blog. So this guy, you might not even call him an activist short seller because he publishes on longs and shorts, and it's more of a blog than I think really trying to expose companies. Basically, he was talking about this pair trade play where he said the current market price of Sogu implies a high likelihood that it'll be acquired by Tencent, and the market's saying that, hey, this acquisition is going to be successful. But a related company that owns a lot of Sogu implies a very significant likelihood of failure. So you buy the company that's pricing no deal happening, you short the company that's saying a deal is likely, and in theory, you'll make money if the deal closes. I didn't follow this one this closely because it's not my type of thing, but Kaneko Research I think is also worth following and is generally pretty good. Citron posted a take that I do not agree with at all. So, a lot of people are playing with Bitcoin, trying to invest in Bitcoin. I think the way a lot of people do it is through the Grayscale Bitcoin Trust. GBTC. And what people have pointed out recently is the Bitcoin Trust is trading at a discount, not a premium, a discount to Bitcoin's price. I'm really skeptical. So people are like, oh, it's trading at a discount now because Bitcoin is cooling, but once Bitcoin's hot, it's going to go trade at a premium again. That could be the case. That totally could be the case. It also could be a lot of times if you have these like closed end fund type things, there's a risk of fraud. And there's a risk that the Bitcoin Trust is going to pay themselves a ton of fees and you're like, you're slowly going to be bled out that way. I'm particularly nervous about, the potential for fraud. Anytime like these spreads start widening really quickly, with an ETF, you start wondering, like, could they have lost some of their Bitcoin? Could this not be up to code? So I think if you want to buy Bitcoin, you should just buy Bitcoin. I don't see why you'd buy the Grayscale Bitcoin Trust just because it has a discount to NAV. Usually there's a reason for a discount to NAV. So I'm super skeptical there. White Diamond Research published on this $300 million company called Intrusion. Hopefully the report loads. I don't know if it'll load. Basically, this is a cybersecurity company whose stock is up 400% over the last 12 months, but the company holds no patents, had a recent CFO resignation, and has high insider selling. One guy who I think is worth following for your audience, who posts his stuff occasionally that's really good, is this guy, Kubiku. I don't know if I'm pronouncing this right, but he posted, he just created a new Substack where he shares ideas. And his first one is about Clover Health not being the next GameStop. I thought this one was pretty good. It's free to sign up for his Substack. And basically, Clover Health was up a ton last week on erroneous short float data. Some people were circulating a rumor that like 140% of Clover's float was being shorted. That wasn't true. It came from an error in like FactSet data where they counted the founder's B shares as like A shares. And when you did that, the float dramatically reduced because you assumed some of the A shares were being held by the founder and therefore not being part of the float. But those shares weren't being held by the founder. Those were B shares separate. And he's basically saying like, look, this is not going to be another GameStop situation. The float short interest isn't 144%. And I think following these Substacks is really interesting because oftentimes they'll post really good stuff. The market won't immediately get it, but then as it's shared, it might get priced into the market. So generally, I think following more of the off the beaten path trade authors is a better trading strategy. And that's most of what I have, Spencer.
Interesting. Whoops.
How do I stop this?
Let's do that. How about that? No, the Clover thing was weird. I don't really want to go near that with the 10-foot pole. I think what's happening with Clover is messed up. Incorrect data or not, I think it's trading like a stock that's being manipulated, and I don't want to go near that with the 10-foot pole. All right, so a busy week last week, Edwin, on the short report front. Have you gotten any hints? Any feeling in the winds as far as like this week and what could be in store, or are you just watching for follow through on the last few weeks? And answer that, and then I have a follow up.
So it's always tough to tell. I have noticed, like, I recap these things every week. Some weeks there's 2, some weeks there's 8. So it really does seem like people tend to, like, I don't want to say coordinate, but it's more than just coincidental. I think the driving factor behind whether or not people release short reports is whether or not they think the market's going to accept it. So if the market's ripping up 10% every day, everybody's going to hold off on the reports. But if the market's trading sideways or down, or it's more of like a risk off type positioning for people, then I think a lot of the short sellers are going to release their big short reports that they've been holding on to. So it's tough to predict, but what you can say is, hey, if the market has a really bad day one day, odds are that more short sellers are going to release the reports over the next 2 or 3 days.
What about the segment from last week. We talked about the short reports from 2 weeks ago. Any follow-through action on any of those?
Let's see. Let me take a second to think. Let's see how EBON is trading. Yes. So one second. Hindenburg Research published on this Chinese company, eBank International Holdings. The ticker's EBON, trades on the NASDAQ, roughly an $832 million market cap. That thing has just been getting demolished. It's down now 50% this month, 12% over the last 5 trading days. Basically, he showed this company raised $370 million through stock offerings since going public in June of 2020, and then has used a lot of that money from the stock offerings, not necessarily to further legitimate business purposes, but to pay $20 million to a related party for a loan, to loan $100 million to its third-tier underwriter, but its actual cryptocurrency exchange has little to no substance. So EBON is one I'm watching. And that's one that's been performing pretty poorly from the last 2 weeks.
Are there any that have sort of gained back those losses? Well, maybe not losses, but whatever their initial reaction was from the report.
Let's see. GSX, is one everybody likes to talk about. That one scares me as somebody who talks to a lot of short sellers, because I think the general sentiment with GSX is, now the manipulation is over. Huang is done. A few people have published even more negative content on them, so it's safe to short because it's a fraud and going to zero. But anytime you get kind of that consensus type feeling, I really worry about another mini short squeeze. Because if you look at the 5-year chart of GSX, it went from 10 to 100 to 40, back to 100. Now it's at 20. I totally think the last thing you'd want to do is be short this and have it go to 80, and it's starting to go up again. So no strong opinion there, but GSX is one that, kind of scares me, because I think the sentiment, just from what I'm getting on Twitter, is everybody says, it's such a great short now.
Edwin, just before I let you go here, we were talking about these anonymous short sellers. You follow the space a lot more closely than I have. Would you say that the number of anonymous, short reports has gone up dramatically in the last year?
Absolutely. Dramatically in the last year and dramatically over the last 6 months. I think just today, there was a new guy, Eagle Eye Research, who just posted an idea on Twitter and got some traction. Just this month, there's been 3. So I think people are starting to realize, hey, you just need to be smart, have an internet connection, have a Twitter, and have a website, and you can post ideas. And if they're market moving, you can build a reputation, and you can probably make money if you're trading it. So I think there has been an explosion, and there will continue to be an explosion, and people should be following the space closely.
I just find that so interesting, because there is this whole revolt against short sellers. I mean, Andrew Left had to quit short selling. It got that bad on GameStop.
Well, I think maybe quit public short selling because he's afraid of squeezes. I think generally the model of having a short book of 50 different companies, that's becoming really tough for a lot of people. But when that's tough, you can focus more on single names. So a lot of these people that have probably done short research at hedge funds, the hedge funds are moving more towards long only. So a lot of the savvy people on the short side are going to launch their own operations.
That's a great point. The minds have to go somewhere, so they're going from the hedge funds to Substack. Maybe that's a theory. That's not bad. I could buy that theory.
And not just Substack. A lot are still just doing their own websites and
Sure.
Twitter.
Or whatever. Twitter. Yeah. Oh, yeah. Whatever. No, I could be down with that, because there are always going to be people that want to short. In the market that we're in, though, we're at all-time highs. We're off those highs today, but generally speaking, we've just been going steadily up a little bit more every day. Is not the best environment for short seller. So we'll see how many of these firms can actually last, right, and have some longevity. But I'm just so interested in the fact that you've observed this explosion in anonymous short sellers in the last 6 months in the wake of a public revolt against shorts, So it's interesting. I wouldn't have guessed this, but
Spencer, one funny thing I read, there was a great institutional investor article on Carson Block today from Muddy Waters, and it talks about him and his firm. And basically, he was trying to get a prime broker to be his prime broker for Muddy Waters Capital, his hedge fund. And he went to Credit Suisse to be his prime broker. And Credit Suisse turned him down, saying he was too much of a reputational risk for them. So they accept Bill Hwang, they accept Greensill, they accept everybody. But like a top tier, highly ethical activist short seller can't get accepted at Credit Suisse.
Dude, I bet you he was like, yeah, that's what you get. That's what you get.
So
I'm the problem. I'm the problem. Yeah. Okay.
The universe has a weird sense of karma there. But I think there's going to continue to be a lot of activist short reports, and people should make a Twitter and follow all these guys because there's a lot of good content there.
All right. We got to keep following you. Edwin's newsletter is The Bear Cave on Substack, thebearcave.substack.com. You can follow Edwin on Twitter as well. His link is in the description. It's at StockJabber. Edwin Dorsey with the weekly short recap. Thanks a lot, man. Appreciate it.
Thanks so much, Spencer. Bye-bye.
All right. It is 4:27, and we've got Cannabis Insider coming up next. I just wanted to end a couple minutes early and just talk about some after-hours headlines because I mentioned we are in the earnings season. Thank God. Thank God, honestly. So IBM out with a beat and a beat on the EPS, a beat on the revenue, total cloud revenue up 21% year over year. They see fiscal year 21 adjusted free cash flow between 11 and 12 billion dollars. That excludes $3 billion of cash impacts from some sort of restructuring in Q4. Let's go to the chart. Let's look at how the market is reacting. The numbers are what they are. Let's see what the market has to say about IBM after hours today. Wow, looking good. Up 3.5%, almost 4%. Was up 4% earlier. Nice. All right, the market likes IBM. Remember what Joel said. The market loves to pop this thing and then drop it. I mean, loves to fade IBM earnings. So not surprised to see it up. Would be very surprised to see it hold these gains the rest of the overnight session through the pre-market into the open. That would be a surprise to me if IBM managed to hold these gains until 9:30 tomorrow. I could be wrong, but that would be just based on historical patterns. That's what tends to happen. It tends to pop and then give those gains back. What else do we see as far as after hours headlines starting at 4 o'clock? Going through the pro. Don't really see. Nah. Don't really see anything. What's up? Producer AT says 2 minutes until Cannabis Insider. So that's fine. Guys, I haven't mentioned this for a few days, but this Thursday, we are preempting all of our programming, everything after pre-market prep, I should say. So we got pre-market prep is going to air normal time on Thursday. And then after that, we've got our next small cap conference, the Clean Tech Small Cap Conference. I will be, I think, the moderator, the host with the most on Thursday. So I want to play a quick trailer for that. If you haven't checked out the small cap conference yet, go to bzsmallcap.com. Here's a taste of what you can expect on Thursday all day. That's this Thursday, bzsmallcap.com. Check it out. It'll preempt the full slate of shows after pre-market prep at starting at 9 o'clock on Thursday. 9 o'clock to 5 p.m. Eastern Time, Thursday, bzsmallcap.com. Check it out. I'll be there as your moderator. Guys, that'll be a wrap for me, but not a wrap for Benzinga programming today. We've got the Cannabis Insider Show starting now. We've got 2 new shows tonight. Mitch is doing a new show. I have no idea what it's about. All I know is it's called Money Mitch. That's all I know. And that's at 6 p.m. tonight. We've got a brand new show called Aftermarket Therapy. That is at 7 o'clock tonight. We've, of course, got the Ruel Report at 8 o'clock tonight. So everyone smash that like button if you can. We really, really appreciate those likes. Thanks to Edwin Dorsey, and I'll see you guys on the next stream.